Good morning, everybody. Still trying to figure out the whole audio setup here, but I think we're in decent shape now. Can you guys hear me okay? All right, perfect. Yeah, let's get started here. Thank you all for being here. Good morning, good morning. I just had the most expensive cup of coffee ever. This place called Joe and the Juice. $7. $7 for this little thing. So if you ever want really expensive coffee, it was good coffee, but $7 for this little thing. That's a lot. Joe and the Juice. It's a good place, but very expensive. Very expensive. Cool. All right. Well, we got another minute or so to go, and then we'll get started. Has anyone ever been there to this place? Okay, good. Good. Cool. All right, let me move my window a little bit here to make some room. I think this is how you move this window. Oops. Oh, here we go. There we go. Perfect. Top of the hour. Let's give it another 30 seconds or so, and then we'll get started. They have them in New York, John. They have it in Manhattan. They have them in California. I think the brand is from Denmark. This Joe and the Juice place. They make a tremendous spicy tuna sandwich too. Anyway, all right, let's get started. Let me see here. Well, obviously, first of all, good morning, and we have an important Fed meeting today. Obviously, I think that goes without saying. Everyone knows that. Just as a quick recap from yesterday. Actually, let's start off with last week. Remember last week, our inaugural morning set the market thing. We talked about the stock general dynamics, and this wasn't supposed to be a stock that's going to explode higher that very moment, but we did talk about this stock looking relatively good. It's unchanged, that idea. Some people have asked me to follow up on it, so I thought I would give you just a quick sort of update on this. So still good, still looks constructive, and I think ultimately this is probably a stock that's at least from this point on here we could see probably another 5 to 10%. Again, we probably need a broader market risk on sort of for that to take place. Having said that, let's talk about really two specific things. I want to keep this very much to the point, but more than anything, what I want to do here right now is I want to give you what I think is an important thing to watch after the Fed today and then into tomorrow. Maybe last thing before then, just quickly on Apple. Yesterday we talked about seasonal weakness in the Apple. If you didn't watch that, go into YouTube here, click on the live shows, and you can watch yesterday's recording. I don't want to go over too much detail, but that was actually something a lot of people enjoyed, the seasonal weakness here for Apple for the next another sort of number of weeks or so. Anyway, to me, honestly, the number one thing to watch is probably going to be how are growth equities going to trade through the Fed? And actually, I just had a morning call with my colleague and analyst, John Burnell. You guys know him if you're an Inner Circle member. And on our morning call, we talked about how we're going to have to see how the market reacts here for a while. Like, this is not something where, Jerome steps up to the microphone at 2:30 p.m. New York time today, and, the market will do one thing or another, and that's going to be how it's going to be for the next few weeks. That's most likely not going to be the case. We're going to see some moves in one direction or another, and then, as I always say, institutional investors have to make up their mind. These guys are not going to make up their mind, halfway through the press conference. Like, they're going to have their morning meeting tomorrow morning, right, before they make up their minds. Now, on top of that, we have the seasonal weakness. I expect a lot of choppiness, to be honest with you, through sort of a multi-week lens, regardless of what happens with the Fed today. It's not like whether it's 25 or 50 basis points. Honestly, I'm not quite sure it matters. I think it's more about their guidance and quite frankly, maybe even more important ultimately is what does not the Bank of England but Bank of Japan do on Friday. Like, that could be more important in one direction or another. But I think either way we're going to see more choppiness. I think that's really my call. But from a risk-on perspective, the one thing that I'm watching, remember this is supposed to be at the one thing, this whole Set the Market show. That's why we keep it to 15 minutes in the morning. I want to see how growth stocks are going to hold up. So one way you can do that is we can look at an ETF called ticker symbol is VUG. VUG. I'll type it into the chat box. VUG. That's the ticker symbol that is basically represents growth stocks. Now, two very important things about that. Why do I care about that? I care about that because we've actually seen, if you look at the past 3 months, growth stocks have actually underperformed value stocks, and value stocks is VTV. I'm going to type in VTV into the chat box here. Have actually underperformed VTV over the past 3 months by something like, what is that? More than 9%. Year to date, it's actually much more close. Like, growth is actually still outperforming value by a little more than 3%, 3.7%. But over the past 3 months, as we've seen this rotation into more defensive posturing, growth has underperformed, right? Now, why do I care about that? I care about that because ultimately, and we've said this now for years, the market concentration is so heavy. So the 50% of VUG, let me bring up that ETF, 50% of this VUG ETF is 6 stocks. And you all know which stocks those are, right? Those are your Apples, your Amazons, your Nvidias, your Googles, your Metas. 50% of that ETF. Now, look, the equity market can grind higher without the performance, but it can't really meaningfully go higher in any real meaningful momentum way unless we see this part of the market start to outperform again, or at least perform in line with the market, and it's not. One thing that I mentioned to some clients yesterday on the phone, this is over at Blue Marlin Advisors, if you look at the SMH ETF, this is semiconductors, they've done nothing since March. Now, they've gone down, they've gone up, but from an investment perspective, the SMH is at the same exact spot that it was in March, right? So these things are consolidating right now. And the reason why that's important is because, again, unless these things really perform, at least with the market, it's mathematically very difficult for the broader market to go higher. So if you're asking me, what's the one thing I'm going to watch very closely from a trading perspective, I want to see how does growth hold up here over the next few days. If for some reason, and I honestly think there's a very low chance of this happening, but again, I want to be open-minded from a trading perspective. If growth starts to act well again, so you want to look at like the 3-month record. So if growth starts to have another move here higher for whatever reason, right? The machines nowadays don't need much of a reason. They're just machines, so they do whatever they want to do based on whatever data they find. That would be very bullish for the equity market, even despite the headwinds potentially that we have from a seasonal perspective. Although again, I assign quite a low chance of that, but I want to be open-minded to it. What I think is more likely to happen is we're going to get a Fed that's quite dovish, and in that dovish commentary, over the next few weeks, we're going to start to see growth still not pick up a lot. But if it does, I want to be mindful that could be very, very bullish going forward. If you guys have any questions, please let me know. Aside from that, again, our seasonal work and seasonality is, as I always say, it's just one thing to watch, but it's one thing that I think is quite important, particularly most importantly during election years here in the end of the third quarter going into the fourth quarter. But I really want to see how does growth hold up? Like, is growth going to start outperforming again? And when that does, maybe that's not until after the election or through the election, that would be a very bullish sign for me to get long equities. I would love that to happen at much lower levels, but what I think no one cares about, nor should anyone care about in terms of the market, right? The market is going to do what it's going to do. So that's something that I'm watching. In fact, it's the one thing that I'm watching very closely. The other thing that I want to point out is momentum. So we track momentum, near-term momentum, using something called the TST Trender Indicator. And so right now we've actually had a very choppy period for the TST Trender that we haven't seen in about a year and a half, this kind of choppiness. And it tells me that where we are is there's a pretty big area of indecision right now. And that makes sense. Again, that's the seasonal choppiness pattern we talked about. So I want to see, how does momentum hold up? We had a great momentum buy signal back in May. Then we had a momentum sell signal that worked very nicely. This is the NASDAQ 100. That's right there. Then we had a momentum buy signal, and that one didn't last for but a few days. And then we had the first real one this year that just didn't work. I mean, it worked for like a day, right? That's not enough. That took place on the 28th of August. I mean, literally, it worked for like 2 days and then, basically was stopped out again. So this zone we're in right now from a price action perspective, and again, this goes into the more holistic application or analysis that we do, I think it's very, very tricky. And again, it fits into the broader picture of where we are seasonally and why we're here, right? Institutional investors are just not willing to commit in a big, meaningful way ahead of the elections. So we're in this choppy zone here. So if for some reason we were to see the momentum indicator trigger higher, meaning follow through from the buy signal we got just a couple of days ago, and again, I'm taking this with a grain of salt, this buy signal, because it happens before the Fed. I'm not going to trust this, right? So, but that's something I'm watching very closely. I'll update you guys over the next few days here as well. Tomorrow is we're going to meet again tomorrow morning. We're going to analyze the market again post the Fed. So we'll see what happened there. But these are the two things I'm watching. I want to see how growth stocks hold up versus value stocks, and I want to see how momentum holds up here. If anything, and momentum might as well go right back to bear. So we've had a tremendous set of momentum signals. You can see when they triggered, but we've had a very choppy series of momentum signals since mid-August. And again, that's the broader market that's becoming more nervous or more choppy and less willing to commit. So again, you have to be very careful here. Nora Lita is asking, it's a good question. First of all, let me just clarify this. Seasonality is a bull market thing, right? Equity seasonality. I know people don't tell you that because they haven't experienced it, but seasonal analysis is very much a bull market thing. I'm not saying it doesn't work in any other market, but it's particularly useful in bull markets. When markets become choppier, and we're no longer in a zero volatility linear bull market, and we're probably just about there now, seasonal analysis becomes a lot less reliable, and a lot of people are going to hurt a lot after that. Our seasonal point, and I'll be happy to quickly bring this up. And I don't want to go too long because we said we'll keep this to roughly 15, maybe 20 minutes here and there. Let me quickly try to show you our seasonal work. So you can see that. Give me just 1 second if I need to find it here. I think it's this one here. Seasonal, maybe it's over here. Yeah, and these are good questions. If you guys have more questions, let me know. I'm trying to find a chart for you that I have been showing people around the election year seasonality. Here we go. Okay. So this is, bring it over. This is the seasonal pattern during election years, right? So yes, at some point we could get seasonal, strength again, but it's typically not until the very latter part of October, maybe even through the election. Just don't do it blindly. Like, there's a lot at stake here, right? I think this is a pretty big deal. So we could, and I do think we're going to get another run higher. But it's not for the reason a lot of people think. A lot of people say, oh, it's because this person wins the election, that person wins the election. There's actual reason for it, and the reason largely from a flow perspective is because what tends to happen. I'm moving the screen. What tends to happen is that institutional investors are taking a break right now from allocating, right? Not a total break, but they're less willing to commit a lot of capital until the election is over. And so once we're past that point, there's going to be a pent-up demand for institutional investors that have to allocate capital. Think of, things like pension funds or things like insurance companies that have new commitments coming in every single day. They have to allocate that money, right? So that's typically why we see that rally afterwards. It's not because that person wins or that person wins. Maybe some of it, but that's not really the point. So the seasonality, there's a reason behind it. And yeah, definitely, if you like this, folks, give us the like button, the thumbs up. Thank you, Joel, for the reminder. And Nora Lee, I hope that gives you a little bit of perspective. The whole seasonal analysis pattern is something that a lot of people talk about because it's a very simple and an oversimple thing for people to follow. I would really, really, really caution people from using. I see a lot of people using as their only guidepost, and I can only tell you that ultimately probably will lead in catastrophe, ending catastrophe at some point. I'm not saying it's happening today, right? But anyway, just my 2 cents here. Hopefully this is helpful. Again, we're going to reconvene here tomorrow morning, and we're going to see how all this plays out. But again, in summary, I'm going to make sure I want to have a very close eye on value and see how value stocks trade relative to growth stocks, as we said before. Again, I'll give you the statistic here. So over the past 3 months, we've seen a lot of outperformance by value. By value over growth, and that's really what I want to watch here. And then again, the momentum work, I'll let you guys know tomorrow as well about how that played out. We'll see if we get a new momentum buy signal here that's confirmed. But give us a thumbs up. You have to hit the like button. I think that's the point. But anyway, folks, that's it for me. Have a great Fed day, and we will catch up with you guys again here tomorrow morning. Spread the word, right? This is an open show, so make sure if you invite people to it, that would be great. And we'll keep growing this. So 15 minutes in the morning, hopefully it's helpful. We'll see you guys tomorrow morning. Take care. If you're an Inner Circle member or CSA member or Vertical X, we'll be in the chat room as well later on today as well through the Fed. Talk to you soon.